Good morning traders, it's Pete here. Welcome into another trading kitchen video. In this video I will talk about ICT and above all how we can have much more confidence in our trading if we had the footprint studies to the ICT concepts. I'll be honest, I think I am the only trader in the world who hasn't followed the mentorship, the ICT mentorship, and who has known its reality for a very short time. Okay, I am amazed by the huge amount of traders who trade with his concepts, and I have to tell the truth, many ICT traders on YouTube should stop trading and teach how to make videos, especially to me, because they are really well done. Okay, seriously, the thing I noticed watching his videos and that made me really satisfied is that many of the ICT concepts are things that I'd noticed and on which I base my do strategy well before knowing him. So in this video, therefore, I want to show you how important it is to add a footprint chart to have greater confluence and enter the market more safety. Okay. So for example, the silver bullet strategy, which is probably the most common strategy of ICT. So this is a strategy that, to be honest, I used. It is quite similar to my intraday strategy. Okay, so basically the strategy is this: you have to wait for a sweep of liquidity on 15 minutes time frame. Okay, wait for a break of the structure, retest in a fair value gap on 1 minute time frame, enter the market with stop loss at the high. Okay, and take profit on the low of the previous session or 1-2 risk to reward ratio. Okay, so this is basically a very big recap of silver bullet strategy. So today I just traded. I just opened a trade during London session. So as ICT said, from 10 to 11, no sorry, from 3 to 4 a.m. New York time, so during the London session, and I want to show you how I enter the market and using footprint chart, so adding footprint chart to ICT studies. Okay, ICT concepts. So this is a session, so we have to wait for 3-4 a.m. New York time to be open, and let's mark on all the highs and the lows of the session. Okay, so of the Asian session. So we are here. Okay, and the highs of the low are basically this one: 1, 2, 3, 4. Okay, so just we have to wait the sweep liquidity in one of these levels. Okay, so let's go on 1 minute time frame. Oh, sorry. And let's see what's happened. Okay, we have this one. So now we have to wait for an imbalance. Okay, fair value gap on 1 minute chart, because price sweep this liquidity. Okay, to be honest, this is not a trade that I took, but we have this fair value gap, but price did not re-enter into the fair value gap, and now broke the price broke the high of the session. So now we have to wait this sweep of liquidity, so price need to re-enter into the zone. Okay, so, and this is what it happens. So now we have to wait for a fair value gap, which is this one. Okay, this is the fair value gap. So as price re-enter here, retest the zone, we can enter. Oh, sorry, this is the fair value gap. And so this is the trade. Okay, well, to be honest, now I see that probably this is not a fair value gap. No, this is the right fair value gap, which, yeah, price touched the zone. Okay, so imagine that we enter here and we can add this, take profit of this structure. Okay, so price go down and take profit. Okay, so yeah, the strategy is good, and it happens on NASDAQ, on S&P almost every day, to be honest, so it's very good. But what if we add a footprint chart to have much more confidence to our trading? To be honest, I don't like this kind of, I don't like to enter blindly, okay, because I can't see what is going behind the candle, so why have to enter here just because we have fair value gap? To be honest, this is not the confluences that I want to have. I prefer seeing what is going behind the candle, and if we go on a professional trading platform like this one we have on multi-wave, this is the same chart, okay, using footprint chart, okay, using footprint. So this high is the high of the liquidity of the Asian session. Okay, the first thing we have to highlight is this movement. As you can see, this violet boxes are all absorption. So the first thing we have to notice is that here we have liquidity. Okay, this is a very good signal when we have this displacement, and basically is this one. Okay, is this one or this one? No, I don't remember. No, it is probably this one. Anyway, doesn't matter. This is 3, so it's 9 my time, and this is 226. Yeah, this is the second one. Let's have a look to the first one, which is 26, which is this one. Okay, well, we have a displacement here, which we have so many bearish imbalances. Okay, with the POC over here, trapped buyers. Obviously, we don't have high volumes here, so during the Asian session when the US is closed, basically, but it's something that we can notice anyway. Okay, so this is not a very clear signal, to be honest. This is much more clear, okay, because we have at the London opening we have, so 9, we have absorption here. Okay, we have trapped buyers, so this is a very good signal. So what does it mean? It means that we have to wait for the price to break the structure, and let's see how it is going to behave, basically. Okay, and as you can see here, price broke the highs and then re-enter. Okay, re-enter the zone. Now with ICT concept, if this is our imbalance that is being tested here, as you can see, to be honest, I don't have any signal here. Okay, I don't like this kind of candle because, yeah, we have trapped buyers. Maybe we don't have any switch of the POC, we don't have clear delta, so nothing tells me that it's a very good deal to me. Okay, but if we go on and we see this candle, okay, with a clear bearish delta, with a clear switch of POC, and above all, if we keep on going forward, what we can see is a clear CVD divergence. So CVD is going up and price is moving down. So what does it mean? That basically these are all buyers that get absorbed here. So you can tell me, you can tell, but so if my entry is probably this one, okay, with ICT concept my entry is here. Okay, so you enter later. Yes, it's true, but with ICT concept your stop loss is this one. Okay, if you use footprint chart and this is my trigger in which we have delta, volumetric engulfing with delta, we have a clear break of structure both from the price and from the cumulative delta as well. So we have agreement between price and cumulative delta. My enter is on the retest of this candle, okay, so here on the POC, and my stop loss is just here, okay, it's just here because we have trapped buyers over there, okay. And then you can see with footprint chart the strategy is the same, okay, but with footprint chart I have here, this is our TP, so here this is our TP, which is 1-3, okay. On the same level, if this is the stop loss, because ICT said just few points or pips above the high, and if I go on the same level, same target, we have 2.6, which is more or less, it's not changing so much, okay, but this is only an example. And a lot of the times, if you know, well, not a lot of the times, always basically, if you know how to set your stop loss, okay, using trapped buyer or trapped sellers, for example, your drawdown could be drastically reduced, and obviously you can risk a little more in terms of size, risking the same in terms of money, okay, and get a much higher risk to reward ratio, okay, because you know also the retest, for example, also the exact point of entry is not this one. I just wait for a retest because I know that this is a POC that haven't been tested yet, okay. So 80% of times when you have an untested point of control, price tends to retest it, okay. Stop loss just here above the trapped buyers, which are this green number. They basically are bullish imbalances, okay. So this is a first confirmation that we are on the right side of the market, and now wait for a trigger, okay. A lot of the times price do something, so a lot of the time price retest here the highs, okay, and if here we have probably an untested POC, for example, price often tends to go in and retest it, okay. That's the reason why it's very useful knowing what's going behind the candle, because you basically you drastically reduce your risk and you avoid many entries, okay. I just want to show you another trade, which is, to be honest, that I missed because probably I was not focused, but this is one of the biggest trades you can do, okay. So where is it, yeah, here, okay. So as you can see, this is basically my liquidity strategy, okay. We have imbalance here, okay, no, for 5 minutes, sorry, 5 minutes, and let me find the exact point, yeah, here. So we have imbalance here, okay. Price had the first reaction inside imbalance, okay, and then we have this clear, I call it the day-to-day pattern, but this is a clear bullish aggression, okay. So how we can enter here? Yes, when you see this kind of setup, this kind of candle, this kind of pattern, okay, you can pretty much sure if you are on the right side of the market, I mean in terms of bias, okay, the structure is bullish. So 7 times to 10 price retest the same zone and go up, okay. This is in terms of price action, but let's have a look to the footprint chart. So this is 11, which is here, okay. So this is the same candle. So the entry is here that I highlighted. Okay, so first of all, we have equal lows here. Okay, 1 and 2. This is a clear signal of liquidity. So a lot of the time price go down, take the liquidity, grab the liquidity here, and goes up. The first thing that the footprint chart tells you is this one. Here we have a huge cluster, okay, is pretty much visible with delta charts, okay, with an untested point of control. So this is not a rule, but if we grab the liquidity, if you have liquidity to grab close to a cluster, and we have the structure, we have aligned with the main structure, so we have much more confluences. Okay, I go pretty much sure, I enter the market with much more confidence. Okay, so this is the cluster, liquidity grab here. Let's move down on 1 minute, and let's see how price is behaving here. So price go down, bearish imbalances, so this is a bearish climax basically. Okay, obviously we don't know, but we know it when we are here. Okay, but a lot of the times to go when price want to go up, before make this kind of movement, take the liquidity in this way. Okay, so with a strong bearish displacement, okay, with a very quick movement. Okay, so we have double equal lows here, and CVD is going up. So this is not easy to show, but to see, sorry, but this is a small divergence. Okay, then we have switch of the POC. Okay, look at the POC, look at the yellow box here, here, and here, then here again. Okay, we have a strong confirmation by delta volumes. Okay, and we have a 25% of delta changing. Okay, so on this candle we have bullish imbalances, so this is another confirmation. Okay, we have lots of confluences. Trading is a mother of confluences. So when we have 3-4 confluences that we have to obviously backtest, you can enter here, stop loss just here, and then you can use the same way to exit the market. Okay, so we have a 5 risk to reward ratio. Okay, I probably want to exit here because we have this movement right by here. Okay, in which we have, here because we have switch of the POC, for example. Okay, and so this is 4.9 risk to reward ratio, completely different thing, using footprint chart instead a simple candlestick chart. Okay, so guys, I hope you like this video. Let me know what you think about using the comment section below. I remember you to join my Discord group, in which you have future course, you have CFD course, you have all my backtest with all my trading journal, like in which you have all the trades that I made with basically two strategy, all the screenshot. So you can see all the reasons by which I enter the trade, all the amounts, all the results in a very total, transparent way. As you can see, this is my win profit for the liquidity strategy in July. 31 one trade every 3 trades takes my TP. So it's not a very good result, to be honest. It's very low. If you are used to see the YouTube traders results, in which I see 90% win profit strategy, 85% win profit strategy with something, there's something I cannot believe, to be honest. This is the real result. Okay, this is the real traders result. Okay, I mean on the retailers side anyway, but I am profit because I try to stay disciplined, I trust my strategy, and I have a huge try to have a risk to reward ratio at least 1 to 3. Okay, so you have all this stuff, and that's enough. Subscribe to the channel, press the thumbs up button, ring the bell, and see you in the next video. Thank you very much, guys.